Hey everyone, it's Matt. In this video, we will continue with where we last left off, discussing supply and demand zones. So I'll be answering some questions like, how do we draw a supply zone? How do we draw a demand zone? And where can we spot them? So if you enjoyed this video, as always, be sure to drop a like and subscribe to this channel if you haven't yet subscribed. So in the last part, we discussed the difference between supply and demand and how if you have an imbalance between the two within a certain price region, so if the top traders in the world, which have a lot of money, if they choose to push price action to the upside or they choose to push it to the downside, they have more liquidity to do so. So if we have a price region where price action is essentially accumulating before we see a large impulsive move to the upside, this would be a region of demand. So over here, I'll put base, which basically implies that this region of where price action was accumulating before we saw the impulsive move was essentially a base. And so then if price action were to retest this region in the future, there's a greater probable likelihood that we might have another reaction similar to this one over here. And the same thing applies for a supply zone, except it's the opposite. But just a quick clarification, I don't mean that if we have a base followed by an impulsive move, that the next correction will lead into a demand zone or will lead into a supply zone. So this is just an example of where we pushed to the upside and then we dropped back down, but it doesn't have to happen so soon. And in many cases, it doesn't happen right away. Now, something that I just quickly wanted to bring up, I figured it would make sense to discuss this because eventually you might encounter these terms. So I just wanted to explain this as simply as possible. And that's where we can have a rally base rally, a drop base rally, a drop base drop, or a rally base drop. This is basically showing us the different types of ways of how we can get a supply or demand zone depending on which direction the price action is going in. So in the first one, a rally base rally, all this means is that we have a rally, so a bullish impulsive move, and then price action is accumulating within this base, and then we push to the upside. And so this base would act as a potential demand zone in the future. And now for the next one with a drop base rally, it's very similar to the last one, except the only difference here is that before we formed our base, we had a bearish impulsive move. So that's where price action dropped, it formed a base, and then it rallied. And then if we look at the last two, they're the same, except it's the opposite, where we have a drop, a base, where price action consolidates for a bit, and then we have another bearish impulsive move. And then for the rally base drop, we can see it's the opposite of a drop base rally, where we basically have an impulsive bullish move followed by a period of consolidation, followed by a period of consolidation before we see a drop to the downside. So don't overthink these. These are just the different types of ways of how a supply or demand zone can form depending on if it's a continuation in a trend or a reversal in a trend, or in these two, this would be a continuation to the downside, and this would simply be a reversal. So now to show you guys some examples of supply or demand zones, we will start off with this example of a supply zone. We had a period of where price action was essentially pushing lower and lower, forming lower lows and lower highs. And then we had a base of where price was essentially consolidating for a little bit within a very tight range. And then we had this strong impulsive move to the downside. And typically, if you have a strong reaction with very little to no retracements along the way, which is why I chose this example in particular, well then this is a region that is usually a bit more significant as a supply or demand zone. And that's because if we had a minor drop with a big retracement and then another minor drop with another big retracement and it took a long time for this to play out, well then this would imply that there wasn't such a big imbalance between supply or demand as we had thought. And that's obviously because if institutions are looking to push price action in a certain direction and they have an abundance of orders and there's an abundance of supply or demand, they want to do this quickly. And so that's why after price action retested this region, we had another impulsive reaction to it. Now, supply or demand zones don't succeed 100% of the time. So like anything in trading, there is probability attached to it, but this is typically why I like to look at regions of where there's a tight base prior to a big impulsive move. And it's even better if the impulsive move forms lower lows, if it's pushing to the downside, or if it's forming higher highs if it pushed to the upside. And so when drawing this, I connected it to the base of where I saw the majority of candles closing within this range. Now, it's a little bit subjective, so some people might look at a higher time frame. I was just on the 1 hour chart. They might go onto a higher chart like the 4 hour, the daily, and they might look for a single candle that's going in the opposite direction compared to the impulsive move that happens. So they might choose this bullish green candle and they will connect it to the bottom, so the opening of that candle, and then they'll connect the top of this base to the high. And another way to do it would be to connect, in this case, we're connecting a supply zone. So we would connect it to the bottom of the base, so where we got the majority of candle closes, and then we would connect to the absolute high of this base. And so this would be a few more examples of some current supply zones that are present. The reason why I'm not including any supply zones that are within this region of price action is because price action has already moved above these levels. And that's because once you have a supply zone, like the one over here, and you extend it to the right and you get a strong reaction to it, this is where its significance, due to being recently tested, starts to diminish. When you draw supply or demand zones, it's best if you look for, as I mentioned, a base before we see a strong impulsive move, and it should also be a region that hasn't been tested for quite some time. So in this case, this supply zone here on the right, it hasn't been tested, but if price action were to test it, we might see some type of reaction. But with all of this, we have to keep in mind that we don't just blindly draw supply and demand zones and trade only based off of them. And that's because supply and demand zones get stronger if we look at the higher time frames. So we might have a supply or demand zone on the 1 hour, but if the 4 hour and daily market structure is changing and it's approaching a significant level of demand, but on the lower time frame we have a tiny level of supply, well then we might have some reaction to it, but the overall price action on the larger market structure will take over. And so this would be an example of a demand zone, and we can see that price action pushed to the upside, it accumulated a little bit, and then that's where we had a strong reaction with very little to no retracements, meaning that there was an abundance of demand sitting in this region. And so afterwards, when price action decided to retest this level, so in this case, we had a quick reaction followed by a retest before the bigger reaction. And then afterwards, once it retested this level again, it reacted once again, but then slowly over time, the power of this demand zone diminished because price action had retested this level at this point multiple times already. And so here's two more examples of some demand zones on the same chart. So we can see that prior to this move, we had a base over here, except this was a much wider base, and the impulsive move afterwards wasn't as strong, But when price action dropped down, we did have a wick and then a retracement, and now it retested this level once again. So this is one reaction to this region of demand, and then here's a lower one that hasn't been tested yet. However, we can see that we had a base of where price action accumulated pretty tightly before we saw a strong impulsive move. And so if price action were to retest this level, there's a good chance that we would see some type of good reaction once these levels are tested. So I hope that you guys enjoyed this video. If you did, be sure to drop a like. And if you'd like for me to clarify something a bit better, be sure to drop it down in the comments so I can cover it in the next video. So I will be continuing this in part 3. And as a reminder, for those that haven't joined my trading community, the links are down in the description to the Discord app and the Telegram app. Thanks for watching. I'll see you guys in the next video.